Based on the historical data and forecast, Bitcoin has shown a downtrend with increasing volatility. The RSI consistently remains below 30, indicating an oversold condition. The forecast data suggests a continuation of this downtrend, with prices fluctuating around $85,000 to $87,000. The support price is stable at $84,700, while the resistance is at $91,400. Considering these factors, I recommend a short selling strategy. We will enter a short position at $86,200, placing a stop loss at $88,100 to protect against a potential reversal. The initial target price is $84,700, aligning with the established support level. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it indicates a potential bounce. However, given the overall downtrend and oversold RSI, we will maintain the short position. If the price reaches $84,700, we will take partial profits and move the stop loss to the entry price of $86,200. If the price continues to fall, we will adjust the target price to $83,700. This tiered approach allows us to capitalize on the downtrend while mitigating risk and maximizing potential returns. Based on the historical data and forecast, Ethereum has shown a downtrend with significant volatility. The RSI consistently remains below 30, indicating an oversold condition, suggesting a potential for a rebound. The Bollinger Bands show that the price has been fluctuating within a wide range, recently nearing the lower band. Considering these factors, I propose a contrarian strategy focusing on capitalizing on short-term bounces. We will initiate a long position when the RSI reaches 20, with an entry price of $2,770. A stop loss will be placed at $2,710 to mitigate potential losses if the downtrend continues. The initial target price will be $2,880, aligning with the forecast and the middle Bollinger Band. To enhance the strategy, we'll incorporate a trailing stop loss based on the upper Bollinger Band. As the price rises and the upper band moves upwards, our stop loss will follow, securing profits. If the price reaches $2,880, we will move the stop loss to $2,810, locking in a portion of the gains. If the price continues to rise, we will adjust the stop loss accordingly, aiming for a final target price of $2,920, coinciding with the upper end of the forecast range. This dynamic approach balances risk and reward, capitalizing on the predicted rebound while protecting against further downside. Based on the historical data and forecast, XRP has shown a downtrend from November 11, 2025, to November 24, 2025, with a recent bounce. The RSI indicates oversold conditions, particularly on November 19, 2025, with a reading of 31.4. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential rebound. Considering these factors, I recommend a long position with an entry price of $2.07. A stop loss should be placed just below the support level at $2.05 to limit potential losses. The initial target price is set at $2.21, aligning with the forecast price on December 1, 2025, and the upper Bollinger Band range. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 60, consider taking partial profits at $2.18. Conversely, if the RSI falls below 30 and the price approaches the $2.05 stop loss, exit the position. The overall portfolio will prioritize this long position, allocating 60% of the capital. A smaller 20% allocation will be used for a conservative strategy, buying XRP at $2.13, setting a stop loss at $2.11, and targeting $2.25. The remaining 20% will be held in reserve, ready to capitalize on any further price dips or unexpected market movements. This diversified approach aims to maximize returns while mitigating risk. Based on the historical data and forecast, BNB has been in a downtrend, consistently testing the support price of $832. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below the oversold level of 30. The Bollinger Bands show that the price has been trading near the lower band for the past 2 weeks, suggesting potential for a bounce. My strategy is to implement a combined approach utilizing RSI, Bollinger Bands, and support/resistance levels. I recommend initiating a long position at $837, coinciding with the forecast price on December 1, 2025. A stop loss should be placed slightly below the support level at $820 to mitigate potential losses if the downtrend continues. The initial target price is set at $861, aligning with the recent resistance level and a potential rebound. To refine this strategy, I'll incorporate RSI signals. If the RSI rises above 30 and approaches 40 within the next few days, it signals a potential shift in momentum. In this case, we can adjust the target price to $895, the previous resistance level. Conversely, if the RSI remains below 30, indicating continued weakness, we should tighten the stop loss to $816, the lower Bollinger Band. This dynamic adjustment allows us to capitalize on potential reversals while minimizing risk. This combined strategy leverages multiple indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values frequently dipping into oversold territory below 30. The forecast data further supports this downward trajectory, predicting a continued decline. Considering the support price of $127 and the recent dips in the RSI, I recommend a long position entry at $126. A stop loss should be placed at $123 to mitigate potential losses if the price breaks below the support level. The initial target price is set at $138, aiming to capitalize on a potential bounce from the support and a possible short-term reversal. To refine this strategy, we incorporate the Bollinger Bands. The price consistently trading below the middle band confirms the downtrend. A long position entry at $126, with a stop loss at $123, remains prudent. However, the target price is adjusted to $136, a more conservative target considering the bearish momentum and proximity to the resistance level of $153. This combined strategy leverages the oversold RSI and support level for entry, a tight stop loss for risk management, and a realistic target price aligned with the prevailing market conditions. The portfolio consists of 60% of the RSI strategy and 40% of the Bollinger Band strategy. Based on the historical data and forecast, TRON demonstrates a downtrend with decreasing RSI values, indicating weakening buying momentum. The forecast suggests a continuation of this downward trend, with prices potentially reaching $0.268. Considering the support price of $0.274 and the RSI consistently below 50, a short position is warranted. I recommend entering a short position at $0.275. A stop-loss order should be placed just above the upper Bollinger Band at $0.293 to limit potential losses if the price unexpectedly reverses. The initial target price should be set at the support level of $0.274, aiming for a quick profit. To refine this strategy, we can incorporate RSI signals. When the RSI falls below 30, it signals an oversold condition, suggesting a potential bounce. If the price retraces to $0.274, we can consider covering the short position and re-evaluating the market. If the price breaks below $0.274, indicating a potential breach of support, we can tighten the stop loss to $0.273 and set a new target price at $0.269. This combined approach, blending trend analysis, Bollinger Bands, and RSI signals, should maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin has been in a downtrend, consistently testing the support level of $0.14. The RSI consistently indicates oversold conditions, fluctuating between 31.8 and 41.4. The Bollinger Bands show a narrowing range, suggesting decreasing volatility. The forecast predicts a continued decline, reaching as low as $0.138. Therefore, I recommend a contrarian strategy focusing on short-term bounces within the downtrend. My proposed strategy is a combined RSI and Bollinger Bands approach. We will enter a long position at $0.143 when the RSI approaches the oversold level of 20, anticipating a short-term bounce. The stop loss will be set at $0.136, just below the lower Bollinger Band, to limit potential losses. The target price will be $0.151, aligning with the upper Bollinger Band and a potential resistance level. This strategy aims to capitalize on temporary upward movements within the prevailing downtrend, offering a relatively quick profit with defined risk parameters. Based on the historical data and forecast, Cardano has been in a downtrend, consistently testing the support price of $0.405. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands show the price trading near the lower band, reinforcing the downward momentum. Given this trend, I recommend a contrarian strategy focusing on short-term bounces. We will implement a buy strategy when the RSI reaches an oversold level of 20, aiming to capitalize on potential short-term rebounds. The entry price will be $0.401, with a stop loss placed just below the support level at $0.399 to mitigate risk. The target price will be set at $0.427, aligning with the recent resistance level and anticipating a potential bounce. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band and the RSI confirms an oversold condition, it signals a potential buying opportunity. We will enter a long position at $0.388, place a stop loss at $0.378 below the lower band, and target a profit at $0.401, near the middle Bollinger Band. This combined RSI and Bollinger Bands approach offers a balance between capitalizing on oversold conditions and confirming price momentum. The most efficient portfolio will be a combination of these two strategies, weighting the RSI strategy more heavily due to its stronger signal in this downtrend. Based on the historical data and forecast, Bitcoin Cash exhibits a clear upward trend, supported by consistently breaking above the $500 mark and the recent forecast predicting prices above $540. The RSI indicator has been fluctuating, with recent readings above 50, indicating increasing momentum. Considering the Bollinger Bands, the price has been approaching the upper band, suggesting a potential for further upward movement. Therefore, I recommend a long position strategy. We will enter a long position at $542, setting a stop loss at $534 to mitigate potential losses if the trend reverses. The target price will be $577, aiming to capitalize on the anticipated upward trajectory based on the forecast. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 40, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop loss at the support price of $482 and a target price of $556. Conversely, if the RSI exceeds 60, suggesting an overbought condition, we will consider exiting the position or shorting, but given the bullish forecast, we will prioritize the long position. Combining these signals, the most efficient portfolio involves primarily long positions with dynamic stop loss and target prices based on RSI and Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend, consistently testing the 3000 support level. The RSI consistently remains below 39.6, indicating an oversold condition. The Bollinger Bands show a narrowing trend, suggesting a potential breakout. Considering these factors, I recommend a long position strategy when the price reaches the 2910 level. The stop loss should be set at 2860 to protect against further downside risk. The initial target price is 3000, aiming to capitalize on a potential bounce from the support level. To refine this strategy, I will incorporate the RSI and Bollinger Bands. If the RSI rises above 30 and the price touches the bottom of the Bollinger Bands, I will enter a long position at 2920. The stop loss will be placed at 2890, and the target price will be 2980. This combined approach leverages both momentum and volatility indicators to enhance the probability of success. This portfolio combines the support level strategy and the RSI and Bollinger Band strategy to maximize returns. Based on the historical data and forecast, XRP has shown a downtrend from November 11, 2025, to November 24, 2025, with a recent bounce. The RSI indicates oversold conditions, particularly on November 19, 2025, with a reading of 31.4. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential rebound. Considering these factors, I recommend a long position with an entry price of $2.07. A stop loss should be placed just below the support level at $2.05 to limit potential losses. The initial target price is set at $2.21, aligning with the forecast price on December 1, 2025, and the upper Bollinger Band range. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 60, consider taking partial profits at $2.18. Conversely, if the RSI falls below 30 and the price approaches the $2.05 stop loss, exit the position. The overall portfolio will prioritize this long position, allocating 60% of the capital. A smaller 20% allocation will be used for a conservative strategy, buying XRP at $2.13, setting a stop loss at $2.11, and targeting $2.25. The remaining 20% will be held in reserve, ready to capitalize on any further price dips or unexpected market movements. This diversified approach aims to maximize returns while mitigating risk. Based on the historical data and forecast, Pendle exhibits a downtrend, particularly evident in the recent forecast prices which consistently decline. The RSI consistently remains below 50, with several days dipping below 30, indicating oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a contrarian strategy aiming to capitalize on potential rebounds. We will implement a long position when the RSI reaches an oversold level below 20, targeting a move towards the resistance level of $2.6. Specifically, let's initiate a long position at $2.04. Given the oversold conditions and the potential for a bounce, our stop loss will be set at $2.01 to limit potential losses. The initial target price will be $2.44, aligning with the recent high and a reasonable profit margin. If the price reaches $2.44, we will move our stop loss to break even at $2.04 to secure profits and protect against a reversal. Further, if the price continues to rise and approaches the resistance level of $2.6, we will take partial profits and adjust the stop loss accordingly, aiming to maximize returns while managing risk. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels for a balanced approach. Based on the historical data and forecast, Pudgy Penguins exhibits a clear downtrend. The price has been consistently declining, with the RSI consistently below 35, indicating oversold conditions. The forecast for the next week projects continued downward pressure, with prices falling from $0.01 to $0.00874. The support price of $0.0102 has held firm, but the overall trend suggests a potential breach. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.0105. The stop loss will be set at $0.012, just above the resistance level, to limit potential losses if the price unexpectedly reverses. Our target price is $0.0085, aligning with the lowest point in the forecast. To refine this strategy, we'll incorporate Bollinger Bands. The price consistently trades near the lower band, reinforcing the downtrend. The center band is also declining, further supporting our short position. The RSI being consistently below 30 indicates a strong oversold condition, but a potential bounce is possible. Therefore, our short position at $0.0105 with a stop loss at $0.012 and a target price of $0.0085 provides a balance between capitalizing on the downtrend and managing risk. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while minimizing losses. Based on the historical data and forecast, Pepe shows a downtrend with consistent support at $0.00000410. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands show that the price is nearing the lower band, suggesting potential for a bounce. Considering these factors, I recommend a long position when the RSI reaches an oversold level of 20. The entry price should be $0.0000410, coinciding with the support level. A stop loss should be placed just below the support at $0.0000390 to protect against further downside risk. The target price should be set at the center of the Bollinger Bands, $0.0000570, anticipating a rebound towards the mean. To refine the strategy, we'll incorporate a portfolio approach. 60% of the capital will be allocated to the RSI-based strategy, capitalizing on the oversold conditions. 30% will be dedicated to a Bollinger Band strategy, entering long positions when the price touches the lower band and exiting when it reaches the middle band. The entry price is $4.06, the stop loss is $0.0000380, and the target price is $0.0000520. The remaining 10% will be held in cash, providing flexibility to adjust positions based on evolving market conditions. This diversified approach aims to maximize returns while mitigating risk, leveraging the strengths of each technical indicator. Based on the historical data and forecast, Ethena exhibits a clear downtrend. The RSI consistently remains below 30, indicating an oversold condition, while the Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast price for the next week projects further decline, reaching as low as $0.216. Given this bearish outlook, I recommend a short selling strategy. We will enter a short position at $0.237, placing a stop-loss order at $0.263 to limit potential losses if the price unexpectedly reverses. Our initial target price will be $0.216, aligning with the forecast low. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, around $0.218, we will consider taking partial profits, securing some gains while leaving a portion of the position open to potentially capture further declines. If the price reaches $0.216, we will close the remaining position. This approach combines the oversold RSI signal with the Bollinger Band's volatility contraction to create a robust and adaptable trading plan, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Pump.fun demonstrates a clear downtrend, with consistently decreasing closing prices over the past 2 weeks. The forecast for the next week also suggests continued downward pressure. The RSI consistently remains below 50, and frequently dips below 40, indicating weakening momentum. The Bollinger Bands show the price consistently near the lower band, further reinforcing the bearish trend. Given this analysis, I recommend a short selling strategy. We will initiate a short position when the price reaches $0.00245, with a stop-loss set at $0.00248 to protect against a potential short-term reversal. The initial target price will be $0.0023, aiming to capitalize on the ongoing downward trend. To optimize returns, I propose a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. When the RSI falls below 30, indicating an oversold condition, we will enter a short position at $0.00245. The stop-loss will be set at $0.00248, and the first target price will be $0.0023. If the price reaches the support level of $0.00253, we will maintain the short position with a revised stop-loss at $0.00256, and the second target price will be $0.0022. This combined approach leverages multiple indicators to increase the probability of success and manage risk effectively. Based on the historical data and forecast, Sui exhibits a clear downtrend. The price has consistently approached the support level of $1.35 and the RSI values are predominantly below 30, indicating oversold conditions. The Bollinger Bands are also widening, suggesting increased volatility and a potential for further price decline. Given this bearish outlook, I recommend a short selling strategy. We will enter a short position at $1.41, placing a stop-loss order at $1.44 to limit potential losses if the price unexpectedly reverses. Our target price is $1.25, aiming to capitalize on the anticipated downward momentum. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 30 while the price is near the support level of $1.35, we will consider covering the short position. Conversely, if the price touches the lower Bollinger Band, it could signal a potential bounce, prompting us to adjust the stop loss or partially close the position. The portfolio will prioritize the short selling strategy, with adjustments based on RSI and Bollinger Bands to manage risk and maximize returns. This dynamic approach allows us to adapt to changing market conditions and optimize our investment performance. Based on the historical data and forecast, Dogwifhat is exhibiting a downtrend with increased volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, dipping as low as 31.1 on November 22, 2025. The forecast projects further decline, reaching 0.356 on November 25, 2025. Considering these factors, I propose a short selling strategy. Entry price will be $0.35, with a stop loss set at $0.36 to protect against a potential reversal. The initial target price is $0.33, aiming to capitalize on the immediate downward momentum. To refine this strategy, we'll incorporate Bollinger Bands. The price frequently tests the lower band, suggesting potential for further decline. If the price breaks below the lower Bollinger Band of $0.316 on November 25, 2025, we can tighten the stop loss to $0.32 and adjust the target price to $0.30. This adaptive approach allows us to maximize profits while minimizing risk in this volatile market. The combined strategy prioritizes the short selling trend, supported by RSI and Bollinger Bands analysis. Based on the historical data and forecast, Ether.fi has shown a significant downtrend over the past 2 weeks, with a recent low of $0.677. The forecast for the next week indicates a continuation of this downward momentum, with prices expected to reach as low as $0.651. The RSI consistently remains below 50, hovering around the oversold territory, suggesting that the asset is currently undervalued. Considering the downtrend and oversold conditions, I recommend a short selling strategy. We will enter a short position at $0.713, placing a stop-loss order at $0.766 to limit potential losses. The target price is set at $0.651, which aligns with the forecasted price and provides a reasonable profit margin. To refine this strategy, we'll incorporate Bollinger Bands. The price consistently trading near the lower Bollinger Band indicates a bearish momentum. The strategy will be to short Ether.fi at $0.663, with a stop-loss order at $0.677, just above the support level. The target price will be $0.651. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile, capitalizing on the prevailing downtrend while incorporating technical indicators to enhance precision and manage risk effectively. The portfolio will prioritize this combined strategy due to its robust risk management and alignment with the projected price movement. Based on the historical data and forecast, Bonk shows a clear downtrend. The price has been consistently trading below the Bollinger Band's middle line, and the RSI has been hovering below 50, indicating weakening momentum. The forecast for the next week predicts a continuation of this downward trend, with prices expected to remain low. Given these factors, a short selling strategy is recommended. We will enter a short position at $0.0000930. The stop loss will be placed just above the upper Bollinger Band at $0.0000142 to protect against unexpected price spikes. Our target price will be set at $0.0000810, which aligns with the recent low and provides a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. When the RSI falls below 30, oversold, it suggests a potential bounce. However, given the overall downtrend, we will use this as a confirmation for tightening our stop loss rather than initiating a long position. If the RSI reaches 27.3, we will move the stop loss to $0.0000120. Conversely, if the RSI rises above 50, it might signal a trend reversal, and we will consider exiting the short position early. This combined strategy, leveraging Bollinger Bands for trend identification and RSI for risk management, aims to maximize returns while minimizing potential losses in this bearish market.